Yeah? Okay. All right, we're going to go ahead and get started. Thanks, everybody, for coming. This is the third session of Wall Street Boot Camp. Morgan Samet's here tonight. She's going to talk about investment banking so that you'll have a very comprehensive understanding of what it means to work in investment banking. It's different from sales and trading. It's different from private wealth, and she's going to go into that in depth. Before we do that, I want to make a couple of announcements. If you hadn't already heard, Jim Cramer from Mad Money will be broadcasting his show live in Eisenhower Auditorium on March 26th. So about a week before that, there will be a table in the atrium where they'll be giving tickets away. We asked to have well, I didn't ask. Somebody asked to have a block of tickets reserved for the boot camp and the PSIA and the Nittany Lion Fund people, but apparently their people are pretty tight with the tickets. So it's going to be first come, first served. So we're hoping that you can all be on the lookout for that on the plasma screens, on your email. There will be announcements about when that will be. I think that would be a fascinating experience. I hope to be able to get there myself.
Probably the first place it will be announced is up on the SMEAL website.
Oh, yeah.
And from what I've heard, they kind of line people up in advance, probably at 1 or 2 o'clock. They go in. We'll start filming probably not till about 4 o'clock, and then it actually will be live that night at 6 o'clock on CNBC.
Mm-hmm. Very exciting opportunity. Yeah?
You know when the tickets go on sale?
No, I don't. But if you look on the SMEAL student site, there'll probably be an announcement. And also look on the plasma screens. I'm sure we'll have it advertised well in advance, and it will be something that you can't miss, I hope.
I'm not sure if they're for sale. I think they're complimentary.
I think they're free.
And I heard it's going to be maybe March 18th, roughly a week in advance. So it's going to be the week right after spring break.
Yeah. Okay. All right. Another thing, somebody asked, how do you get to vault.com on the library site? So you go into LIAS, L-I-A-S, on Penn State's site, then go into e-resource library, then into Vault, and you do not need a password, but you do have to have the most recent version of Adobe Reader to be able to download it. Okay? So that's vault.com. There is a Dropbox up for homework from week 1, which, if you remember what that was, it was tell me your 5 strengths or 5 things about you. I forget what it was, but you can go back to Randy's presentation and see what it was. Some of you have turned in the homework. That's great. Some of you gave me hard copies. That's fine, too, but I prefer to see it on the Dropbox. There is a Dropbox up for the second week's homework, which was a copy of your resume, your cover letter, and a sample email that you would send to someone you were attempting to network with. So the deal with the homework is it's supposed to be done and in the Dropbox before this session. So if you haven't gotten your resume, your cover letter, and your sample email, and your stuff from Randy's first session, make sure you get that in really soon. We will be checking for the third homework assignment to make sure you've turned it in before. I mean, you won't get your certificate if you're not here to sign the sign-in sheet. Another thing, we had a huge number of people here for the first session, and a very, significantly lower number of people here for the second session. Did I say for the second session first? First session, good attendance. Second session, dwindled. So we are going to be instituting a sign-in sheet because you will not get the certificate unless you attend all sessions and stay for the whole thing and do the homework. We made the mistake of putting the podcast up, and so people were thinking, oh, if I just watch the podcast, I don't actually have to go to the session. But that's not the case. So sign-up sheet, I'm going to start it here, and if some people come in late or whatever, I'll make another announcement at the end. Okay, without further ado, I'm going to introduce Morgan Samet. Morgan is a senior. She did an internship with Bear Stearns her freshman year, and she was working in, I think it was derivatives.
Derivatives middle office.
Derivatives middle office. She just wanted, she thought she wanted to do Wall Street, wasn't sure, had a great experience there, got an offer to return, decided that she wanted to see what else was out there just to make sure she was making the right decision. She did an internship with GE the following summer, and then the next summer, Goldman Sachs. Duh. She did an internship with Goldman Sachs, and she was offered a full-time job in investment banking at Goldman, so she'll be starting that pretty soon, right?
Yeah.
So, without further ado, Morgan Samet.
Okay. Before I start, how many of you are actually interested in investment banking specifically? I think. Okay, it's like a third or fourth. This is loading. All right, so I'm going to go into some detail about what investment banking is. I'm going to go through a brief financial example of a leveraged buyout. And then I'm going to talk about how you can obtain a career in investment banking, so an internship or a full-time job. And then I'm going to touch upon some of my experiences that have led to my job at Goldman Sachs, as well as what I did this summer. And then talk about an assignment that you guys are going to have to complete for next time. So can someone tell me what the difference between an investment bank and a commercial bank is? I know this might be basic for some of you, but it is a key point, and I've actually been asked this in quite a number of interviews. Anybody? Somebody here has to know the difference between a commercial bank and an investment bank. John Brozick.
Commercial banks take more of a big pool of money from a bunch of different people, and they'll lend out to more individuals, smaller companies. Investment banks will actually go out and find the investors who are willing to buy into XYZ securities or a new loan that's coming out there.
Okay, that's correct. So commercial banks, they take in deposits and then they make loans, like Wachovia, Wells Fargo, something like that. And then investment banks are intermediaries between people who need capital and people who want to invest capital. So a small example of that would be, say I'm GE and I need to raise additional funds for a potential investment or project that I'm planning on making. I go to an investment bank. Some bankers will, maybe they'll either raise debt or they'll raise equity for me so that I can, do this investment, make this project happen, and then it'll go to the markets, and the markets will be providing that capital. And so it's just an intermediary between people who need capital and people who want to invest capital, and that's just the ultimate basic level of what an investment bank actually is. So how does it function? You've got front office, middle office, and back office. In the front office, you've got investment banking, which I'll talk more about. You have investment management, which is managing other people's money, either wealthy individuals or institutions. You've got sales and trading, which is what you imagine on the trading floor, people selling, trading stocks or bonds, derivatives, things like that. There's structuring, the people who come up with some of these complex products, put them together, back test them, model them, things like that. Merchant banking, which would consist of different private equity and prop areas of a firm. Equity research, which could include equity research, and strategy, which would be firm overall strategy. The middle office is risk management, finance, and compliance. So just making sure that the firm is doing everything that it needs to on its books, making sure it's not taking on too much risk, making sure it's in accordance with laws and policies. And then there's the back office, which is operations and technology. So how does investment banking specifically fit into an investment bank? So it's, you've got an investment bank, and then you've got an investment banking division, two separate things, and sometimes people will throw them into one conversation and it gets confusing. So make sure that when you're talking to somebody, you're clear that you say, I want to do investment banking in an investment bank, because some people will assume that you're not sure what the difference is. So what's investment banking? It's essentially advising CEOs and companies on decisions, whether that be financial advisory or capital raising. So can someone tell me what they think investment banking is? First of all, Ryan, how would you explain it?
Two companies want to merge, or a company wants to find a company that gives you better equity, and the investment bank is trying to figure out which is the best option for those two companies to get together, or for another company to acquire one.
Okay. Anybody else? I mean, it's on the screen, so that should help. All right, so financial advisory would be anything in which you're giving a company a recommendation on what it should do to change the structure of itself. So a merger, should we, Procter & Gamble, should we merge with another company? Should we acquire another company and roll it up into our specific company? Should we do a recapitalization, which would be changing the debt and equity structure of our organization? Possibly even a dividend recapitalization, where I would issue a dividend to myself, and which would be essentially paying myself. Or a divestiture. Should I spin off part of my company? Should I spin off a full subsidiary? Should I only spin off part of my subsidiary? Should I do a partial sale to investors or a partial sale to the public markets? So decisions regarding the company's structure. And then you have capital raising, which I mentioned a little bit earlier. A company needs money for possibly even for one of their advisory transactions. They need money. They have a project or investment or whatever, and so they can raise money through either equity or debt. So equity would be an IPO, an initial public offering, selling stock on an exchange, a secondary following, issuing more stock, or debt, taking out loans, issuing bonds, things like that. So if you are going to be an investment banking analyst, it will come to a point in which you have to decide whether or not you want to be in an industry group or a product group. So industry groups, the breakdown of these groups, by the way, differs by firm. It's an industry standard that there are industry and product groups at every firm for the most part, but the specific breakdowns will be different for every firm. So industry groups would be financial institutions, technology, media, telecom, energy, healthcare, consumer retail, industrials, real estate. So you're advising companies within a specific industry. So I worked within financial institutions, so I dealt with insurance companies, banks, asset managers, hedge funds, private equity firms, things like that. And then there's product groups who deal with the products that the investment bank offers. So mergers and acquisitions products, leverage finance for an LBO, debt products, equity products, financial sponsors, so dealing with private equity firms. And so you'll be in one of these two different groups, and on deals that require both, which all do, there'll be analysts from product groups and analysts from industry groups working together on the same deal, and whoever's specialty is needed on what part of the project is used, and vice versa. So it's just all about which specialization do you prefer. Do you want to always be dealing with financial institution companies, or do you want to always be dealing with mergers and acquisitions? So that's the decision. Did you have a question? Does anybody have any question up until now? Talk a little fast. All right. So, can you guys read this? This is the structure of a typical initial public offering. Actually, it's from the Vault Guides, which you cannot make it through. Oh, well, you might be able to make it through, but it's not advisable making it through an interview without reading the Vault Guide to Finance Interviews, because all your interviewers have definitely read it. And when push comes to shove and they ran out of time to prepare for the interview, they're asking questions straight from the book. So this is the process for initial public offering. A private company issues stock for the first time. And so how does it work? Phase one is where the company that wants to go public hires the managers. So pitching beauty contest would be, say, Goldman Sachs, JP Morgan, and another firm all want to represent a firm that's trying to go public. So they all put together a presentation on why they're the best firm to represent the company to go public, put together some type of valuation materials as to how much money they're going to be able to raise, and then the firm that's going public decides which manager it wants to go with. And a lot of times it has to do with the name of the firm or the best pitch or the best, maybe industry experience, things like that. And so after that, the firm, the investment bank, who's chosen to represent the company in the deal, does due diligence and drafting. So they need to make sure that everything that they're saying about the company is true, make sure that all accounting and compliance is up to par, meet with the lawyers and the accountants. And they need to start putting together a prospectus so that when the company goes public, there'll be an actual filing so that people have transparency, be able to find information about the company, so which will turn into your 10K, essentially. And so that at that point, after all of the back stuff is sort of getting finished up, you put together a roadshow presentation. So the roadshow presentation is a presentation that represents the client. So, this obviously isn't true, but if GE were to go public for the first time, I would have a template that would be why GE is such a great company, and I'm, Goldman Sachs presenting this. So GE goes out on the road to different investors with GE and Goldman Sachs, if they're representing them, go out on the road to different investors. So Fidelity, Ben Franklin Investments, different hedge funds, things like that, and they try and sell their stock to these, big investment houses, and then those investment houses make a decision. As the roadshow goes on, you're meeting with these big investment houses, and they're all deciding, do I want to buy into this stock, this initial public offering? Do I think that this is a good company? So they make that decision. If they choose to buy, then they put it into their different portfolios that they have for different clients that, depending on which investment house it is, either your mom and dad might have a part of it in their mutual fund, or it's a hedge fund and it's only for accredited investors or whatever. So as this roadshow goes on, you've got a lot I went on a roadshow this summer, and I'll talk more about that later. There's a lot of things going on. You've got people, different investment houses saying, maybe I'll buy into this company, and then you've got the client saying, how much money are we going to raise? Then you've got equity capital markets talking to you on the road, and they're like, we think that we've got this much demand, and we think that we're going to price at this range. So how I mentioned earlier that you come up with a valuation of how much money that the company's going to raise, in the roadshow, you find out if you're actually going to raise that much money based on the demand that comes about in the roadshow. So are you going to price above your range that you originally thought you were going to make, or below your range that you originally thought you were going to make? So this is where you're all figuring it out. And then at the end, the stock begins to trade, and you find out if you're about to make the money that you expected. And if you do make above that, that's very good. And if you don't, it's considered money left on the table. Does anybody have any questions about that? Okay. Okay. So now I'm going to give a brief financial example of a leveraged buyout using talking about private equity firms. Can somebody tell me what a private equity firm is? Anybody? All right. Yeah, what's a private equity firm?
Private equity firm is a firm that invests in new growth-style companies using definitely focusing on their management and using a lot of debt to purchase their stock.
Okay. Anybody else have another definition? Jake? Better? Any other definition? Okay. So private equity firm, how many of you have heard of hedge funds? Bunch. Have you all heard of private equity firms, or is that a new term as well? Okay, so a private equity firm is a firm that buys out companies. So instead of hedge funds where they have speculative investments that are more investment vehicles, private equity firms actually buy out companies. And so they'll raise funds. They'll raise a private equity fund just the way that you would raise money for a mutual fund. So they'll get investors to give them money, and they'll put it into a fund, and then they'll buy out companies using the money in that fund and a lot of borrowed money, so a lot of debt. So they'll buy companies using some money from the private equity fund, so investors' equity, as well as borrowed money from debt, just the debt markets. And they'll buy out a company that's either private or public, but usually public, and they'll bring it private, and then they'll fix it up, and then they'll sell it off and make money. So a leveraged buyout is exactly what I said. The acquisition of a company or division of a company using debt for a majority of the purchase price and equity for the remainder. So the equity is the money that the investors put into that private equity fund to say, hey, I want these managers to go buy a company and give me some returns on what they make from that deal. So the buyer, the private equity firm, borrows a debt portion of the purchase price, typically through public or private bonds and bank loans issued by a company, and contributes the equity portion through a private equity fund, exactly what I said. And the private equity firm relies on the company's operating performance for debt service and repayment. So I bought a company using equity and debt, and now I'm going to use the company's own operations to pay off my debt. So I'm going to use the company's own money to pay off my debt, and so then I'm going to be left with my own equity portion at the end of it when I sell it. So how can I sell this company? It's going to be it's low liquidity, so it's going to be like a 3 to 5 year lockup period because you're owning a company. You're not just going to sell it off the next day. You're going to do whatever you need to do, change around management, streamline operations, their supply chain, maybe just finance it differently. Do whatever you're going to do. And then you're either going to sell it to a strategic buyer, which would be another firm within its industry. So, selling J. Crew to Abercrombie or something like that. Or sell it to a financial buyer. So if Blackstone, a private equity firm, sells a company to KKR, another private equity firm. Or they could break it up. They could break it up into subsidiaries and then sell it off in parts to a number of different people, especially if it's a big company and no one else can buy it. They just break it up and sell it all around to different people. They can IPO it, which means a company they took off the public markets that you could type a ticker in and buy is now, you can't do that anymore, it's private. They re-IPO it and it's back on the markets again and you and I can just buy shares. Or they could do a dividend recapitalization, which is where they issue a dividend to themselves. So essentially they're paying themselves because they own the company. So this is where you guys are going to need to pay attention and definitely take notes, because you are going to have a homework assignment due on this, and you won't have the slides. So this is an example of how that leverage buyout I just described works. I'm using the example of a house you own, and the reason that this example works is because you own the house and you're living in it. Similar to if you bought a company, you could pay yourself with your own money. So that's why the example holds. So say you decide to buy a house. It's your own house, you're going to be living in it. You buy a house for $100,000. And you buy it with $25,000 of your own money, and the rest of it was $75,000 of money you went to the bank, you got a mortgage, debt payments. And so you made some amount of income over the next 5 years, whatever your salary is, but you took $50,000 of that salary you made over the 5 years, and you used that to pay off the debt on your mortgage and all the interest payments associated with it. So here today you have a $100,000 house in which your equity portion is $25,000 and your debt portion is $75,000. 5 years later, after you've used your income, $50,000 of it, to pay off your debt has been brought down to $25,000, so it's just $75,000 minus $50,000, and the value of the house is the same. So the value of the house is still $100,000. We're going to ignore real estate market prices in this situation, but the value of the house is the same, and your debt's gone down. So your equity, your ownership, just think of equity as your ownership, has gone up. So if you want to calculate your return on this investment, which again would be a mirror of an LBO, you would take your return, which is how much equity you have 5 years later, divided by your investment, which is how much you put in of your own money, to the however many years it was. So you have a 25% return. I'll let you guys copy down. Does anyone need more time? A couple people. And so the reason why leveraged buyouts are important is because private equity firms are oftentimes clients of investment banks. So they're the ones giving them, the capital to do these deals. They're the ones advising them on which deals to do. They're heavily linked and associated with the investment banker. I actually advised a private equity firm on going public this summer, so I worked extensively with them. So this is just another example, simple example of how leverage can affect your overall return. So it looks like a lot of numbers, but it's really just a simple concept of that if you use money, if you use borrowed money leverage when making an investment, it magnifies your returns, but it also magnifies your losses. So if you have an investment, a company you're going to buy, and your projected return is going to be 5% without leverage. You think that you can buy it for one price and then sell it for 5% more later. That's without leverage. That's just how much you think you're going to get. Now, what if you use an 8-to-1 debt-to-equity ratio in which you are being levered 8 times? So you have more leverage than you do your equity. If the cost of debt is 4%, what is going to be your total return? So how has the leverage magnified your return from your initial 5% to now 13%? So if you take the difference between your return on investment minus your cost of debt and multiply it by your debt to equity multiple, so 5 minus 4 times 8, and then add, so that's how much the leverage magnifies your return. Add that to your initial return. So by leveraging up and borrowing money, you've used other people's money to your advantage and paid off what you owe, and now you have a better return. But if you look at the flip side, if that 5% return that you thought that you were going to get in a deal turns out only to have been 3%, and you couldn't have sold it for as much as you thought you could, the loss is negative 5%. So instead of having a 3% return, you now have a negative 5% return. So it works both ways. Okay. All right, now I'll talk about what it takes to be an investment banker, what the banks are looking for, and how to position yourself to get an investment banking job. So who are the ideal candidates for investment banking? First of all, I'd like to say that there are no specifically ideal candidates. I mean, every situation is truly different, and every person is different. It really does matter, like who you're in an interview room with, who you network with, a lot of different circumstances. But I would say that if you stick to these, you're putting yourself in a good position. So what are the characteristics of somebody who would be good at investment banking? Somebody who's project-oriented. When you're working on a deal, which lasts for a period of time. It's not real fast like sales and trading where you're sitting on a floor making data, minute by minute transactions. It's more project oriented. So you need to be analytical. You need to be able to put things into a big scope. And you need to have attention to detail because just as nice and pretty as my presentation is, I think, the roadshow presentations and your pitch presentations and everything else is going to be absolutely immaculate. It's amazing how much credibility you can lose if you have a single spelling error in a presentation, and nobody's going to let you nobody's going to let you get away with that, and people will be very upset. Also, you're working with pretty big financial spreadsheets, and so if you just have one number wrong, it changes everything in your model. You need to be motivated. You need to be organized. You need to be a team player. In investment banking, you're working on deal teams, so you'll have an analyst, an associate, a VP, and an MD all working on a deal together, as well as you might be working with people in other groups within the firm. You also need to have a positive attitude because you are going to be working a lot of hours. I guess I would say investment bankers work 80 to 100 hours a week as analysts. It does get better as you move up the ranks, but you are working a lot of hours because there is a lot of work to be done. And you need to be knowledgeable. You need to know how this fits into the bigger picture. Credentials, a high GPA. While you work a lot of hours in investment banking, you also make a lot of money, and a lot of the people who do it are some of the smartest people in the entire industry. So you need to have a high GPA, past internships if possible, definitely leadership experience at school. Maybe if you're involved with sports, that's great. Shows that you're well-rounded, shows that you're responsible and hardworking, dedicated. Study abroad, it's amazing how you can have an entire, I didn't study abroad, but I've heard stories. You can have an entire conversation about study abroad in an interview with somebody who maybe, went to Spain as well, or is from Spain, or something like that. Entrepreneurial activities, even if you just mowed lawns all summer, but you were in charge of the mowing lawns and you hired 5 of your friends, that's a great story to tell in an interview. So anything you've done like that, no matter how small you think it is. Unique hobbies or skills, again, conversation pieces. Research opportunities, if you've done research for a professor, any strong relationships with professors that have turned into something more academic that you could talk about. And the biggest thing about on this entire page is network. It's about who you know, and then it's about what you know. Because if you don't meet the right people, no one's going to know who you are, and so all the things that you've done will go to waste. Okay. So resumes and networking. I know that Robin and Randy touched on resumes, but I'm just going to make a couple points about investment banking specific things and things that I've learned in my travels. So resume, formatting, spelling, attention to detail. So like I said before, bankers have very strong attention to detail, and if in your resume you don't have that, they're going to say that you don't have what it takes to do the job. I would recommend that you spin the activities to fit the characteristics of a banker. So I listed them previously. So did all the things that you say on your resume, do they say that you're detail-oriented? Do they say you're analytical? Do they say you're a team player? Take those characteristics and apply it to what you've done and make sure that that has that right spin. Networking prep, start reading the vault guides and news. I'll get into resources you can read in a bit. Make a list of companies you'd like to work for and contacts. I've known people whose grandmothers ran into people in the supermarket who work in a branch office of Merrill Lynch who knows somebody. It's amazing. So just start making a list of every possible lead that you can think of. Email, again, formatting, spelling, attention to detail. Always have a point of reference and a follow-up. So when you email someone, say, I got your contact information from so-and-so, so that they'll be like, oh, I like so-and-so. I'll talk to you. It's kind of, they're doing it both to be nice, to help somebody out, as well as they're doing a favor to so-and-so. Because if you're just coming out of nowhere, they're like, I don't know how this person got my information. It just falls lower in the prioritization list of their to-do activities. And the follow-up, don't just say, hi, my name is Morgan. Have, can I call you, or can I visit you, or I'll update you when I hear back about my internship status. Always have the next point of contact. Make it so that you have a reason to contact them again, or so they have a reason to follow up with you. It just can't, don't let anything die. Just like end where it is. If you're going to talk to somebody on the phone, ask for a convenient time, but take the initiative. So ask them when's a good time for them, but unless they say they'll call you, say I'll call you at that time, because just in case they forget. Also, you're better prepared. You're not, running between classes and flustered and can't have a good conversation. You've got you've done your research ahead of time. You have a whole list of questions and discussion pieces, and you're prepared, and you're sitting calm. And so that's just a good way to get things started, is to have you are calling them. If you are making a visit, if you make it from email to phone to visit, be prepared for anything. Try to get as much information as you can before you leave. But I've had situations where I thought I was just having a casual conversation with somebody and it turned into an interview. And I've had situations where I thought I was going on an interview and it turned into a casual conversation. So be prepared for, be prepared for that at all times. Some do's and don'ts. Do dress and act professionally. Gauge the environment. So always act one level of professionalism above whoever you're meeting with. So again, sometimes when you're meeting with people, unless it's like, this is an interview, a formal interview process. If you're just networking with people, sometimes it's hard to gauge, how to act. So if they're acting really, really, really friendly, you don't want to be all stiff, but you still want to be professional. So just act one notch above where they are and bring it down to their level, but still be professional. Think ahead, set up a future timeline. So like I said before, every time you're networking with somebody, you should be thinking about, how am I going to turn this into something more than what it is now? Am I going to talk to them in the future? When am I going to talk to them about what? Keep people updated in the loop. If you say that you're going to tell somebody, I'll update you at so-and-so time, do it. So do it. If you say you're going to do something, make sure you do it. Nothing makes somebody look undependable than dropping the ball. Present a consistent story to everyone you meet. So if you meet people, everybody, first of all, a lot of Penn Staters know each other who work on Wall Street. And if you tell one person, you know, I've been wanting to do sales and trading my entire life, and you tell another person, all I want to do is be an investment banker, and they're probably like good friends, and they're like, oh, I met Morgan, and I think she'll be great for my group in sales and trading. And the other person's like, oh, she told me she wanted to be an investment banker for like ever, and then you just completely discredits you because it seems stupid and everybody's like really wants to support you and is on your side, but they only have limited information about you. They only know what you tell them and what they see. They don't know, you know, Morgan Salmon's doing all this work at school and everybody thinks Morgan Salmon's really credible. They only know the words that you say to them and the actual things that they see. And so you can't fault them for anything that you don't present consistently and accurately. And then be appreciative. People do really want to help you out, and they, especially any Penn Stater that you meet, really loves Penn State and wants to do anything they can to help Penn Staters get on Wall Street. So make sure that you don't feel like you're entitled to a position or anything like that. It's, you know, be really excited to be there. The biggest thing, don't put yourself out there until you're ready. People remember you. You only get one first impression. So if you're not ready and you try and network and meet all these people and then you just, like, you didn't know enough about the markets, you didn't know enough about what you wanted to do, and you came off, you know, a little bit flaky and unsure, then you can't go back. So it's better to just make sure you're prepared before you put yourself out there. So don't speak with too many people too soon because you're going to have to follow up with all those people, and then that gives you, you know, so many people that you need to follow up with if you're not ready. Don't ever any spelling or grammar mistakes. Don't schedule too many meetings. Don't talk about money or hours. That's not what people want to hear about. Don't talk poorly about other people or firms. Don't be arrogant, disorganized, or uninformed. Okay. So interviewing. The application process, make sure you have all the deadlines written down. You submit everything that you're supposed to submit online. Don't miss anything. If you're not sure what exactly it is they want, find a way to ask. And then communicate with your contacts. So, you know, if I've been talking to somebody at Merrill Lynch for however long, and then I haven't talked to them in a month, I apply online, and I think that they're just going to magically know that I applied, then you're wrong. They're not just sitting by their computer, like, thinking, I think Morgan might have applied today. Half the times they're not, you know, they don't get an email every time a deadline is up. You need to say, hey, you know, I just wanted to let you know I submitted my application. Is there anything else I can do? So keep them in the loop. Otherwise, the fact that you know them doesn't mean anything. Personality questions. This is what I did. You don't have to take my advice, but I wrote out questions I thought they would ask me and answers in bullets. So like, there's some questions that you're just going to get asked in every interview. Why did you choose to go to Penn State? Why did you choose finance? Why do you want to be an investment banker? Things like that. And it's like, you don't want to memorize answers, so that's why I say bullets. You never ever want to sound rehearsed, but you also need to be concise because it's so easy to just ramble off and talk like, oh, I've got like 50,000 reasons why I want to be an investment banker, and it's been like an hour and you're still talking like people. So just like make sure you have your story straight. Also, a big thing with personality questions is make sure that you have your resume, run through of your resume down. Your resume should be 30 seconds of a run-through, and it should be telling a story that's not on the paper. Don't read through every item on your resume. You know, say, Morgan Salmon, you go to Penn State, you know, I had this and this internship at school, I'm involved with these 3 things, and I really want to do investment banking because, like that, 30 seconds. Technical questions, personality questions. 3 adjectives to describe yourself versus an iBanker. So think of 3 things that an iBanker, an investment banker is, and make sure that in your interview, you're conveying all 3 of those things. When I walk out of a room, I'm hoping everyone's saying, wow, she's really like analytical and motivated, and she's definitely a team player. She'd be a great fit. Is that what they're going to say when you leave the room? Make sure. Technical questions, be concise and organized. Again, it's really easy to get jumbled up in an interview if someone even asks you like a basic question. Just make sure you're organized. Make sure that they know where you're going with an answer. And can you answer the follow-up questions? Anything you say can and will be used against you. So if you start mentioning things technically and you can't answer the follow-up question, you might want to rethink if you want to say it to begin with. company questions. Everybody wants to know why you want to work for them as opposed to anybody else. And sometimes you might want to use some of the recent deals that they've completed as your supporting evidence. Demeanor, you only get one first impression. Be organized, informed, passionate, and appreciative. So I've compiled, when I was interviewing, a list of every interview question I thought ever that I read in any book. And so I put them in this file, so if you want to open it when you guys do get this presentation, you can look through them.
Morgan, if you'll send it to me, I'll actually put it up on Angel.
Okay. And then here are some investment banking specific books. I know you guys got another resource list, but these are some that I've read and that I found helpful. The Vault Guides, Monkey Business, Inside the Mines, Barbarians at the Gate, The Story of R.J. Nabisco, and then the websites. New York Times Deal Book is absolutely awesome. They just got this new function called Deal Professor, which it's really great. They take any of the investment banking deals and they analyze them like an investment banker would, and it's new. So they'll be like, oh, look at the financing, look at what is the strategic rationale for this. So it's really great because it does a lot of the work for you, and it gives you, a lot of times you'll read articles and they don't give you enough information. You're like, oh, great, the deal was done. I don't really learn that much, but the Deal Professor is awesome, and it's free. Wall Street Journal Deals and Deal Makers, similar to the Deal Book, but I think the Deal Book's better. And then Thomson Financial League tables. So that's how all the different banks rank up against each other. Who's completed the most M&A deals, who's completed the most IPOs, things like that. Oh, God. All right, so I guess now I'll talk a little bit about my experiences, but also mostly leave it up for questions at that point. So I guess what it takes to get a job: leadership and experience, networking, doing well in the interviews, and then making sure that you make the most of the internship when you're there. So my leadership and experience, worked at Bear Stearns in derivatives middle office my freshman year, networked to get that position, did well while in it, and then I worked at GE, as Robin mentioned. I got the opportunity to build a couple of models, financial models. I got an opportunity to fly to Seattle for a strategic meeting, won an internship award, some other great things. I was also the president of the Lion Fund and a lead analyst before that. Involved with a couple other things on campus, the trading room, things like that. Networking. Since I had the advantage of knowing I wanted to do Wall Street very early, I had the advantage of meeting people very early. And then getting to be in touch with them for a long time. I was, on the top list of people that they wanted to help because I came to mind when it came down to my junior year. So getting to figure out what you want to do early and meeting people early is the best thing you can do, because if you start meeting people like a month before the interviews, there's like 3,000 people trying to meet them a month before the interviews. But if you're the one or two kids who met them 2 years before the interviews, then they remember you.
How frequently did you actually go to New York?
All right. You do not need to follow my example with the going to New York. I had the advantage of working in New York my freshman year, so I did network and meet a lot of people that summer. I accepted my position with GE in November of my sophomore year, so I didn't go to New York too much my sophomore year. Just a couple times, kept in touch with key contacts. And then my junior year, maybe like 10 times with like 2 firms each in the fall of my junior year to set up for interviews. But that put me in a very good position when it came interview time, because with the exception of 2 firms, I received an interview from every firm on Wall Street. So if you time it right, things will work out. But you do not need to go to New York 10 times and meet with 2 by any means. I was just a little paranoid. So, but even the people that you do meet, even if you turn down an interview, you turn down a job, like, be respectful of these people. They are genuine. Make sure that you are not just using them for the time being. I really learned a lot from every person that I met with. And then my summer at Goldman Sachs, I worked on 5 or 6 deals, 3 live deals, and I got to travel on a road show of a private equity firm through the U.S., London, and Milan. So I think New York, San Francisco, Los Angeles, Denver, Houston, Baltimore, Philadelphia, and New York. Yeah, so a bunch of places over the summer. It was really cool working on a $1 billion transaction. Was able to prove myself through that transaction. I was actually only supposed to travel for a week, and then the clients requested that I came back for the second week. So it was an awesome experience, and was able to ask a lot of questions and worked with a lot of great people. Does anybody have any questions about my experiences here at Penn State, interviews?
Well, I have a question about, like, who gets to go on the road shows?
Usually there's an analyst from the investment banking team. There's an analyst and an MD on every roadshow, and a lot of times, like, we had joint book runners, so it was Goldman Sachs, JP Morgan, Credit Suisse on the deal, and so the firms just worked out who's analyst and who's MD went on the deal. And I was the only analyst on the roadshow. So, and then half the time I was with a Goldman MD and half the time I was with a JP Morgan MD. So for half the roadshow I was the only Goldman person on the trip. But so if you're on the deal and you're the analyst, most likely you'll be going on the roadshow.
Morgan, is it typical for an intern to go on a roadshow, or was that because of your performance? Or?
It is not typical for an intern to go on a roadshow. But I guess they felt confident in my abilities to go. But there were 2 other interns out of 16 in my specific group that did get to travel. One got to go to Bermuda for 24 hours. And the other got to travel around New York City with some CEO of a company. So Goldman is pretty good with giving responsibility to their younger analysts. Things definitely started to speed up as I got more offers. So, for example, it's just like, I guess it's just like dating. You know, if somebody else wants you, you know, people want you. It's just kind of like, it's pretty much how it works. So, like the first offer I got, I didn't hear about it for like a week and a half, and the second offer I heard in like half a week, and then Goldman called me in 6 hours because they know that I had other offers, and so the interviews sped up too. So it'd be like there was one day where I got like 3 interviews because they had known that I was moving up in the process. So if you are doing well in the process, they'll speed you up, I guess. If that's right or wrong, I don't know.
What was your experience like when you went into San City at times or whatever to discount work? What's that like? How did you interact with people?
Every time was a different experience. Some of them were like informational interviews. Some people I had never met before and just only talked to on the phone. A lot of times I would go up to New York, and then whoever was my initial contact would introduce me to a bunch of people in their groups, and then I would get more contacts, and every person led to another person. But you talk to them on the phone, you get them to really like you, and you say something along the lines. If you feel comfortable, and again, it's about knowing people and not pushing people's boundaries, because the worst thing you can do is be a pest. You just want to make sure that you're not a pest. You say, hey, I'm going to be in New York. Luckily for me, I lived around the New York area, so my excuses were a little bit easier. So I'm going to be in New York. I'm going to be meeting with another firm. Would you have time to meet with me as well? I'd love to meet other people in your group. That'd be awesome. And then they see your face, match your face to a name. And how many kids do you think they actually met with in person? Not nearly as many as the emails they got or the phone calls they've been on.
How'd you handle your school when you tried off?
Oh, it was tough. One of my professors started calling me Skippy, so that was unfortunate. But he's a really good guy. He's one of my good professors. But I would do it on Thursdays, and I would leave like Thursday night and schedule my meetings on Friday, and then come back like a Saturday morning. So I'd really only miss one day of classes. So I would time it right so that I wasn't missing too much school. And then it wasn't about like the work. The work was fine. It wasn't. You're traveling, and you've got the work was not an issue about missing. It was sometimes missing class was unfortunate, and I was the president of the fund at the time, so I was missing some things, and I had to make sure that I had just time management. Make sure I thought about what we had to do before I left, and made sure I had somebody doing everything that I was supposed to be doing when I was gone. Other questions?
Please take advantage of the fact that she's here and answer your questions. You'll be scared to ask her when she's out only for 2 years, so ask her now.
Okay.
What advice do you have for like freshmen and sophomores that are kind of discouraged by like companies that are just looking for juniors?
Yeah, that's definitely tough. There are some internships you can get as a freshman and sophomore. So like I did a middle office internship or some type of a branch private wealth internship, or maybe something that's not in New York, something with a smaller firm, or even like just a bigger firm but a less desirable position, so a controllership or something like that. Or even if you can't do that, go abroad, do something worthwhile in your summer. But as far as like meeting people in preparation for your junior year, you meet people with the intention of, I'm really interested in investment banking. I want to learn more about it. What can I be doing now so when junior year comes around, I'm better prepared? So then they'll send you some reading materials. Hey, do you think I can sit down and talk to people so that I, get a head start and then can start thinking about what I want to do? And so you're still networking, but you're not networking for the interview. You're networking to learn and to build mentors. And so I think that it might even be an easier position because you're not like begging someone for a job. Like there's no immediate gain for you there, so people are more trusting and more understanding and welcoming. So there's definitely things you could do.
How do you go about finding like a contact information, like if you wanted to set up an informational interview or anything like that, just from like scratch?
There's a number of ways you can do it. You can do it through like your parents, family contacts. The university has a bunch of different alumni databases. There's one for SMEAL. There's one for Penn State in general. I think I've heard of some people maybe even contacting people off the website, but it's probably not a recommended method. Anytime, a lot of times the trading room will have speakers that comes in. And so they're not always from big banks, but they probably either, if they're senior, they might have worked at a big bank, or they had interviewed with people at a big bank, or they have friends who work there. And even if they don't pass you on to somebody else, they're still working for a great financial firm, and those are contacts. Maybe decide to go to GE. Well, I knew that I wanted to do investment banking, so GE they do loans and leases, and they are a very strong. They have the #1 leadership program of any corporate finance company. They're the first leadership program. It's like fantastic experience, a lot of responsibility. And at the time when I was applying for internship sophomore year, like the freshman year internship was kind of lucky, and sophomores at that time, like they didn't really get some of these internships that I'm talking about that now sophomores are able to get, like the private wealth or the like BlackRock was not recruiting. A lot of the firms that some sophomores are able to get now, they just weren't. And I had known somebody, an alumni, who had worked at GE and said it was like the best thing that he had done, and then he went on to work in investment banking and now at a private equity firm. And everybody I talked to was like, oh, do what he did. That's probably your best position. By chance, I did end up actually getting an investment banking interview my sophomore year, and I think it was like March 1st. They sent me an email, but I couldn't go on it because I already accepted GE.
Now that you are going to be an analyst, what's your plan
For the future? Oh, I don't know. I really like investment banking, but I don't think that a person can say that they're going to be a banker for life until they've done their 2 years. So my entire philosophy on my career is just to make the decision that leaves me with the most opportunities next. So I figure if I do these, the next year, because after your first year, you start making decisions as to your next move. So the analyst program is 2 years, and then after the first year, you are either you're interviewing with private equity firms. It's a little bit early, but you might be deciding to go to grad school, a hedge fund. Goldman luckily has an internal private equity firm division, and it's a top 5 private equity firm, so you can do a transfer to that, transfer to a different division in the firm, or you can get invited back to be a third-year analyst, or sometimes every year in my group there's one person that gets asked to be an associate, so a huge bump up. So for me, it's going to be either coming back as an analyst or an associate. or probably going to a private equity firm, maybe Goldman. So I don't know. Anybody else?
How often do you meet with one individual? Kind of run out of things that you really want to talk about after the first or second meeting with somebody?
So number of meetings as opposed to time in one meeting?
I guess not spaced out.
Well, if it's like, it depends on how much time you have left until like junior year interviews come up. So it could be 1 or 2 times, but if it's somebody that you've met with a bunch, you only need to like stop by if you're like in town. Just send them emails to like update them or be like, would you like to go out to dinner? Like, it depends on how close of your relationship has become. You definitely don't want to have like unnecessary, meaningless meetings just because you're like, I haven't met with them in a year, I need to meet with them. Like, you could just send them an email and say, this is what's going on right now, I'm still interested, we should talk some other time or something like that. Don't waste people's time. It's definitely tough because, like I've said, networking is the key to getting a job on Wall Street. And since there are more people on Wall Street from Ivy Leagues, they're all networking with people who are from their alma mater. So that's, definitely difficult. But what Penn Staters have, well, at least this is what they say, is that we've got a work hard, play hard attitude. We're really humble. We don't feel entitled to any of these positions, and we're willing to do and go take the extra step, take the extra mile and do more work than maybe people from the other schools. That being said, you still need to be just as smart and just as knowledgeable. So I think the edge is to be really excited, network as much as you can, be a hard worker. And a lot of the kids from the Ivy League schools, they don't have undergraduate business degrees or undergraduate finance specifically, like sometimes a little econ or something like that. So be really technically savvy. So you've already got the leg up on that because they need to catch up. So if you can prove in an interview that you follow the markets or you know what these deals are all about, then you've got a leg up. And then it always helps to have some type of an interesting story that you can build a rapport with your interviewer or whoever you're networking with. I don't have necessarily an opinion on there's no point to move to another firm if they're not a better firm, first of all. So if you're at a bulge bracket firm, is it really worth making a jump? If you love the culture, that's great. If you're going to move up to the division or the position that you want to be in, then just stay. There's no reason to not stay. You're just burning unnecessary bridges. Any other questions?
I do think that what you do your junior year should be where you ultimately want to work, because these banks are using their internship programs as feeder programs for full-time hires. So most of the kids who do internships on Wall Street come home their senior year with an offer in hand. So definitely, if you haven't figured out where exactly you want to be, make sure that you sort of know that by the time you're ready for seeking your junior year internship.
That's definitely the ideal situation, is to get wherever you want to work full time is where you do your junior year internship. My internship class, it was 160 bankers global, but in FIG in New York was 19, or maybe no, it was 16, and all but one received an offer. So, and then their internship class, the full time class, is going to be 3 or 4 more people. So now you're not fighting for 20 spots or 16 spots for the internship. Now you're fighting for 3 or 4 spots full time against all these other kids. So, and a lot of the kids that maybe you're fighting against are kids who worked at an investment bank, got an offer, but maybe it's not as good as the firm, as Goldman Sachs or Merrill Lynch or a bulge bracket firm. Maybe they worked at a smaller boutique, and so they already have experience too. Mm-hmm. So that puts you in a tough position. Okay. I'm just the type of person who likes to cover all my bases and give people what they're expecting and then add a little bit of a twist. So if you don't ask the questions that they are expecting, it kind of seems a little weird that you're just like skipping around and asking all these out there questions, but you also don't want to like be having a boring conversation the whole time. So cover your bases. Like ask them personal questions about them. People love to talk about themselves and they feel closer to you when they do. Ask them about their personal questions and experiences, professional personal questions. Ask them questions about the company and the program, and then ask them questions about the market and deals within that company. So that's how you cover all your bases and make some of those questions, you know, broad and general, and then some of them like really interesting. You did a lot of research and you're like, wow, I read about this one deal that Goldman did, and it seems like they're doing a new product that I've never seen before, da-da-da-da, can you tell me more about it? So if you've got a couple of those mixed in with some questions that are easing you into that, and I think that's a good approach. So I did have like a general question set, and then I would alter it every single time I would meet with someone.
When you talk about like markets and deals and that sort of stuff, how often was it like every time that they turn around and like ask you questions in return, like when you thought about stuff, you know? Like,
Depends on the person. Some people think you know a lot more than you actually do, and some people think that you know absolutely zero about anything whatsoever, that you're not even sure what investment banking is. So it depends on who you're meeting with, how well they know you, things like that. But again, like just if you don't feel comfortable talking about something, it depends on the situation if it's okay to do this, but say, you know, it depends on, again, the situation. I'm just learning about this. I read about it. It was really interesting. So they know that you don't think that you know everything about it. Or don't bring it up. But gauge the situation. If it's in an interview and it's something you should know, don't say, I don't know anything about this, but so.
Okay. Anybody, we can take one more question, and I have two things to say, and then we can call it.
Got the assignment too.
Anybody have one more question? Because I have a question. Yes.
I did. I think 471 is important. I've not taken 472, but I've heard that it might not be. There's a financial statement class, but I don't think you can take it unless you've taken 471 and 472. It's all up to your personal preference, but I would. It's up to your personal preference. It depends on how much you want to learn on your own versus do you feel the need to take one of the classes. It's definitely like a high consideration. It's definitely brought up. It's definitely discussed. But whether or not it's actually worth it, I think that varies person by person.
Okay. Thank you, Morgan. Great job.
I got the assignment, by the way.
Oh, sorry. Oh, homework. Oh, yeah.
Oh, it'll take 2 seconds. So the homework assignment is just going to be 2 Excel questions, similar to the 2 financial questions that we went over, just with different numbers. And so there will be an Excel spreadsheet posted online. You just need to enter in your answer at the end. I'd like for you to do it in Excel, since if you were to do this for real, you would do it in Excel. But put your answer in the box that's highlighted. And then the other part is, if you are interested in investment banking, what are 3 reasons that why you're interested in investment banking? That's the most important question in your entire interview. So you're going to want to constantly reevaluate your answer and make sure it's up to par. For those of you that are not interested in investment banking, you can either answer why are you interested in Wall Street, or why are you interested in what career path that you are interested in.
After tonight, how many people think they're interested in investment banking? Yeah.
A little bit more.
Yeah, a little bit more. All right, good sales job. Okay. One question I wanted to ask, and I didn't get a chance to ask her, but I might have you do something for the interview section. We have a folder on interviews. Is what was her experience in terms of second round interviews, what to expect, how to prepare? Sometimes they're technical, sometimes they're just a technicality. So maybe you can address that a little bit in the interview section. Not right now. Unless you want her to. How many people want to stick around for that? Yeah, people got to go. You don't. Are you willing to stick around?
I'm willing to stay, but
I think Unless there's a class in here, Morgan's willing to stay a little bit afterwards, so if you need an answer or would like an answer to that question, you're more than welcome to stay. I was visited today by the Department of the Treasury, the Secretary of the State Department of Treasury. I think she did a presentation in the trading room. She came to visit me afterward and said, I want to hire your interns. These kids are learning a lot of stuff, and I think we could really benefit. So we typically have about 16 interns. I'd love to have your students. So she's going to send me a little bit of a job description, but basically the two positions are in investment management and financial advisory group. So if you think you're interested in doing something like that, and you have, hopefully you already have your resume prepared, and if they're crummy, I'll let you know, because I don't want you to send a crummy resume. But if you could send, I know this is a tough week because you're getting ready to travel and go home and all that, but if you think you're interested, try to get me your resume by Friday. If you think you're interested and you can't get me your resume by Friday, just definitely make sure I have it as soon as you get back from spring break. Okay? Any questions for anybody? From anybody? Okay, if you want to stick around for Morgan, if there are other people coming in for a class, then we got to move. But thank you very much for coming, and we'll see you next time.
The Excel spreadsheet and the Word doc are in the PowerPoint I sent you. And
Okay,
you just
so I'll
double-click
take
them, you
them
can
out.
save them.
Okay, excellent. And, yeah.
Are you putting the presentation up online?
No, we aren't.
All right.
Sorry. So the stuff that she, the questions, it'll be posted tomorrow. Okay?
Yeah. He was my